Is it time to pick up shares of Airbnb stock? We know this stock has been battling profitability since inception, and because of this, the stock is essentially back to its IPO level, or at least it was back in January. So we have to wonder, is Airbnb undervalued? Will it be a worthy addition to our portfolio, or should we stay far, far away? Keep watching to find out, as we'll be talking about that and more on today's episode. How's it going? Welcome to Everything Investing. I hope you're having a great day. But with that being said, today we're going to take a look at Airbnb's Q4 2021 results, where we'll do a deep analysis into the financials. We'll take a look for any technical setups. And I mean, this one is going to be pretty clear as day one once we get to it. So stick around for that. And finally, we'll conclude with a valuation of the business to see whether or not this is something we as retail investors should be adding to our portfolios or not. And if you enjoy the analysis and the investing perspective, please like and consider subscribing for more of this content. So as always, just before we jump into the earnings release, let's take a look at how the stock has performed over the last few years. And I mean, this stock IPO just at the end of 2020, really just before 2021 started. So we don't have too much data to go off, but I mean, it's pretty easy what we can see here. We're in a channel. We haven't moved out of this channel since the IPO. We've pushed higher into these 200 levels, got rejected back into the IPO levels, I call them, which is 130, 140. And then the same thing happened again. And so now we're pushing higher once again. This is the third time that we are pushing higher off of the IPO levels. And so it kind of begs the question is, are we going back to those 200 levels as we've seen in the past? We know history doesn't always repeat itself, nor does it have to, but we have to wonder, are we going back to those 200 levels? And based on this Q4 earnings release, it looks like we might just be doing that. As you can see, post hours were up to 187. So let's take a quick look at what happened here. Okay, so after hours, it seems we've jumped from 180 to about 194 per share. And it has since declined back into this 187 range, but this is a significant jump in stock price, and it results in about a 4% return after hours. During the regular session, we were up 6%, so on the day, we're up 10% for Airbnb stock. But in terms of what we can expect next, from a technical point of view, we can clearly see a key level here at about $180 per share. As we've seen a lot of price action at this level, it's held as resistance, it's held as support previously. Resistance again, broke through, came back. And so we know this is a key level for Airbnb. Now the question is this going to continue once again? We've now pushed higher into the 180, 190 price range. So if we come back down into these levels, we'll probably end up seeing this hold as support once again. And we'll likely bounce higher off this level. However, if we do end up falling beneath these levels here, look for this level once again to hold as resistance and push the stock back into our IPO level. However, the real question is, if we purchase shares of Airbnb stock today, are we buying it at a margin of safety as we are pushing higher and getting to all-time highs? Or are we just overpaying for the branding? Let's see what the earnings report can tell us. So jumping right into their Q4 2021 earnings highlights, we can see right away earnings beat estimates by about $70 million and are actually up about 78% year over year. Huge growth in top line results. Now, in terms of their Q4 GAAP earnings per share, these beat by about 4 cents. So, I mean, this is pretty much what analysts had expected, was that they would come in just profitable for this quarter. Now, onto what I believe is the key for this quarter's earnings release is their gross bookings value. This jumped 91% to $11.3 billion on a year over year basis. Huge growth once again. Their nights and experiences booked were also up by 59% year over year. And this points to the recovery that Airbnb is currently taking advantage of. They're seeing a lot more users on their platform taking advantage of these stays, nights and experiences, despite the pandemic situation. And if we take a look at their outlook, they actually expect their first ever positive adjusted EBITDA in Q1 2022. This is the first time in history that they'll be able to achieve this, and they're expecting revenues of between 1.4 and 1.5 billion dollars. So based on these key points here, should we be racing to the window to purchase shares of Airbnb? That's what we'll find out in just a second when we get to the financials, so we can see the big picture view for Airbnb. Okay, so we know top line has been growing effectively. However, we need to know about their margins and costs, because these could be weighing on the stock as to why they haven't been able to break out of that IPO range. That's what we'll get into now. So as always, we're going to look at the bigger picture. We're going to take this from a year ended 2021 perspective. And as we can see, we see that 78% growth year over year in terms of their revenues. As expected, their costs of revenues have increased. However, their cost of operations, product development, sales, and marketing, these are all relatively either flat or decreasing, as well as their G&A. So, I mean, when we get down to their total costs and expenses, these have decreased year over year. That's a great thing to see for businesses that have been struggling with profitability in the past, as we know Airbnb has. If we take a look at this from a year-over-year perspective, their income or loss from operations was $3.5 billion last year. They now are profitable for the year of 2021 by $429 million. I mean, this is a huge growth to think that they came from a $3.6 billion loss last year to now having income from operations of $430 million. That is stellar growth. And it's finally starting to show that their business model might actually be proven and can be a stable one in the future. And this is something we're going to have to find out over the coming years with Airbnb. But up to this point, we're good. However, we see where the real problem lies, and that's their interest expense. This comes in at $437 million just to wipe out all the income from operations that we just raved about. This is up roughly about 2.5 times year over year. And this is the problem, as it leads to our $352 million negative figure in terms of our net income, which translates to a net loss, of course. However, we have to look at this from a year-over-year perspective, and we can see significant improvement from $4.5 billion in losses to now $350 million. And this will be the key with Airbnb for the future, is whether they can get to positive net income for the year of 2022 or not, because the stock will really take off once they do become profitable, because not many investors want to get into a business that can't really turn a profit. So their profitability is key for the stock performance. Now, moving on to their balance sheet, their cash position is improving overall, and that's why we get to current assets of about 12.3 billion, up from 8.9 just 1 year ago. Not much to discuss in their long-term assets. And so we have total assets that have increased by about $3 to $4 billion year over year. We get down to their current liability section. Of course, we're going to have funds payable and amounts payable to customers. And this number here is about $3.7 billion worth. To me, this is what they have to pay out. So this is, I'm going to consider short-term debt of $3.7 billion. Then we're going to come down here to see their long-term debt. This is about $2 billion. So if we add these two figures together, let's say we get to about $5.7 billion in debt. Compare this to our total current assets of $12 billion. This is a check mark for Airbnb's balance sheet, because we now know their debt is not a problem for them and they could pay it off whenever they want it. Now, moving on to the consolidated statement of cash flows, we see that $352 million negative net loss. Add back our depreciation. We add back a bunch of stock-based compensation, some other high-ticket non-cash costs, and we actually come out with about $2.1 billion worth in cash provided from operations. Now, this number is inflated, it's fluffed up by a bunch of items that are non-recurring items, such as these unearned fees that were negative last year but now are positive $500 million. Extinguishment of debt, change in fair value of warrants. I mean, while yes, non-cash costs, they're going to fluctuate year over year. And so personally, I wouldn't really add them back in. This is just what we call financial engineering. And so because their net income figure was negative, we're not going to have much to work with here. So we have capex of about $25 million. So essentially we have the $2 billion worth of cash provided from operations. But again, that figure is skewed. And so we don't have much to work with here. They've paid down $1.9 billion of debt by taking on $1.9 billion of debt. I mean, there's not much here to discuss. So let's get into the valuation for Airbnb as to where we believe the margin of safety lies when deciding if we want to pick up shares of this stock. All right, so looking at a financial overview of Airbnb stock, I mean, we can see there's a bunch of negative figures on this screen here, right? So we don't have a lot to work with in terms of our valuation. We're going to have to come up with a number that we believe Airbnb can get to, and the number I'll use just for simplicity's sake is going to be their earnings per share number. So if we come over to our calculator here, if we assume that one day in the future Airbnb can get to about $3.50 per share in terms of their earnings, let's say for the first 5 years they're growing at about 20%. The 5 years after that they're growing at about 15%. On a 20 PE, the stock should be worth about $130 per share. Now, if we're expecting Airbnb's financials just to completely take off from these levels, let's say they're growing at a very optimistic 35% for the first 5 years, and then about, let's bring it down just a bit to 25% for the 5 years after that, then yes, we can see them up to $406 per share, no problem, on a 25 PE. But I mean, these are really steep growth projections, and they might be just a little unrealistic here. But nevertheless, it is definitely a possibility based on the massive amount of growth that they're currently experiencing. In the worst case scenario, let's say they can only grow at about 15% and then 10% after that. Yeah, we can see the stock fall right down to $65 per share. And I think this really sums up Airbnb. They need to grow. They need to consistently grow at high levels. And if they do, they will see the stock appreciate in value. But I mean, the key is becoming profitable as they are currently expanding their losses. But I do believe that if Airbnb can get to about $3.50 in EPS, yeah, we could see this margin of safety coming in nicely at around $130 per share. If we come back to the stock chart here, that's again down into these IPO levels. So I mean, so if you have shares down into these IPO levels down here into this $140, $130 range, I don't think you have much to worry about. I think you've purchased your shares at a margin of safety. The stock clearly rejects right off these levels and pushes much higher, and now we're back into almost 200 levels. So you're good there. If you're looking at purchasing shares of Airbnb as they flirt with potential profitability in the future, anywhere under 170 is where I would be personally looking to get in. Although I will say this, for me at this current point in time, I feel as though Airbnb is more of a trade than an investment. But with that being said, this is my analysis of Airbnb's Q4 2021 results. Thank you for watching if you made it this far into the video, and with that being said, I'll see you on the next one.